So, will we see the world's central banks restart those printing presses, create more money and inject more stimulus? Now, not only is the Fed being watched for a third round of quantitative easing, but expectations for action are high from the European Central Bank and the People's Bank of China. And joining us to give us insight on this is Sandy Lincoln, Chief Market Strategist at BMO Asset Management, with over $100 billion of assets under management. Sandy, thanks for joining us tonight.
Good to be with you.
Sandy, how likely is it that we're actually going to get something conclusive out of this Wyoming summit? And you're laughing, so that
I am laughing
all.
right off the top because the expectations are way up here, right? And this has been building for years. So we've had the build of this 2 years ago, 3 years ago with Bernanke. Now we've got another big build for it. It reminds me a lot of the 80s when Volcker was speaking about inflation, and there was a huge hue and cry about what he would do at this conference. I think the reality is you're going to see a very tepid statement come out. You're going to see a very bland statement for Bernanke and a bland one by Draghi on Saturday. The things that you're going to hear from Bernanke will be roughly as follows. First, he's going to tell you the condition of the economy. Wow, I think we kind of know what he's going to say about that. The second thing he's going to tell us is that they're monitoring it intensely. And the third thing that they're going to tell us is that they are prepared to act and act boldly if needed, and that they have the tools to do it.
Now, you mentioned tools.
Right.
What tools do we have left here? I mean, the Fed has already kept interest rates at record lows since late 2008. We've had 2 rounds of quantitative easing, those large bond purchases. We've had Operation Twist. What tools are left in the box?
Okay, well, what he's going to do here, and this is the inflection point, so nobody's going to care about those first 3 points, but when he starts talking about the tools range from sort of the shallow end of the pool to the deep end of the pool. The shallow end is simply to do some language that says we're going to keep interest rates longer, not to 2014, but to 2015 or 16. That's in the toolbox. They could also do some additional asset purchases and specify a dollar amount for those. That's in the toolbox. So the question is, how much description does he give of those tools? And secondly, does he give a hint of what the FOMC might do when they meet in mid-September? So that's the key.
Well, here's another question. Meeting in September, meeting in Wyoming. Are we at a point where it's just, pardon the bad pun or the metaphor, giving more drug to a drug addict where you can't get that same high that you got in the first place? I mean, are they still able to get more bang for their buck? We kind of have gotten used to this. So in the market, just expects more and just expects more. And
I think that metaphor is useful to a point, except that you could ask yourself the rhetorical question to that is, are they reducing the dosage every time? So QE2 was mammoth, right? Then we had just Operation Twist, which said we're going to do things a little bit differently on the longer end of the yield curve. So it's possible that what they're seeing is mixed economic data that's giving them reason to say there's enough good news out there that we can continue to step back on how much halfway house treatment we give the patient. And so maybe what's really going on is that they're gradually
weaning us off.
Exactly. It's a possibility. Remote, perhaps, but hopefully.
Now, very quickly, we've got Mario Draghi, ECB president, coming over on Saturday. Is this a sign that we may see some coordinated action, perhaps?
Well, I think it's definitely coordinated communication. They definitely are trying to be on the same page. He's got his own agenda. He's got a little bit more room in some ways than we do. He's got worse conditions, so the policy prescriptions are a little more straightforward. We have more mixed conditions. So for him, he could still lower interest rates. He's not going to do it in this policy statement. He's got to go back to do that. He's got to get the emergency stable mechanism in place over there. He's got to get German cooperation over there. He's got to get central bank supervision in over there. But those are all things that are on his plate for yet this year, and those are reasons for hope. But definitely there's coordination, and both sides of the pond are really looking carefully to make sure they don't get a bad macro event coming.
All right, well, a lot of expectations. Let's see what kind of action we have. Thank you so much, Sandy Lincoln, Chief Market Strategist.